Catherine Murray, host of The Buck Stops Here, joins us now for Forum Daily's crypto and digital asset update.
Thanks, Julie. Hello, everyone, and welcome to your weekly crypto and digital asset update. I am Catherine Murray. Well, we are seeing crypto coins rally across the board, with Ethereum really outperforming, up by about 13%, Bitcoin up by about 6%, but it looks to be ending the week down by about 5% week over week. Total market cap is now at about $920 billion. We know these markets are 24/7, so yes, we are seeing a rally right now. Let's see how it progresses, because as we know, there's been so much volatility. The story of the week, and speaking of volatility and the impact that that's had on so many firms, New Jersey-based crypto lending company called Celsius has in fact filed for bankruptcy. The court documents show that they have 100,000 creditors, about $4.3 billion in assets, but $5.5 billion in liabilities, so obviously a shortfall there. Recall, this is the firm that halted withdrawals back on June the 12th, citing extreme market conditions. And of course, this is on the back of so much of the volatility and the pullback in crypto coins. The court document states that the CEO had been looking for third-party financing but was unable to attain it, hence the bankruptcy. The CEO also points out that the reason for withdrawals across the board was to prevent certain clients from being able to exit at full value and others being left behind. Also recall that Celsius offered its users 17% annualized yield on deposited tokens. Now, we've talked about issues in terms of solvency with respect to Celsius. Another company, of course, is Voyager, running into solvency issues. And the question I think that a lot of investors in the space right now are asking are there other companies out there where we will continue to see some of the pressure and the meltdown on their balance sheets, on their corporate earnings, because of everything we've seen in the crypto space as of late. Now, importantly, though, when you do think about earning 17% yield in a very low yielding environment, even though we're starting to see rates move higher, 17% certainly seems on the high side. Well, SEC Chair Gary Gensler was interviewed in a Yahoo Finance conversation, and he described yields offered by crypto lending firms as too good to be true. Interestingly, he also reiterated the comparison of stable coins to poker chips, which he said must in fact be regulated in order to protect investors from fraud and market manipulation. Now, crypto lending firm CoinFlex has resumed withdrawals, but they are limiting the withdrawals up to 10% of one's assets. Recall that they halted withdrawals back on June the 28th. Meanwhile, despite the fact that we are seeing some shutdowns of various companies running into solvency issues, we're also seeing tech conglomerate Tencent out of Hong Kong shutting down one of its two NFT platforms. Despite the crypto winter and summer, you are seeing other firms continue to plow into the space. Financial firm Jump Trading is all in. And interestingly as well, a very well-known venture firm within the space, Multicoin, did announce a new fund. They're looking to raise $430 million for this fund, and it will be put towards crypto startups. So despite the pullback that we've seen, there are still many other companies that are forging ahead. Lastly, I'll just point out that an interesting headline here, a UK court has approved the use of blockchain to serve someone. In other words, you've been served by blockchain. I'll leave it there, Julie. That certainly takes a little bit more understanding. We'll take another look at that for next week. I'll leave it there. Back to you.
Thanks, Catherine. That was Catherine Murray, host of The Buck Stops Here.